evening, everyone. Thank you for joining us today to discuss our Q3FY18 earnings. I am Natasha Joshi, COO Cafe Coffee Day, and with me on today's call are my senior management colleagues, led by Mr. V.G. Siddhartha, Chairman and Managing Director, Coffee Day Enterprises Limited. We also have with us Mr. Ram Mohan, CFO, CDEL, and Chairman of Concall Logistics Limited, Mr. Jairaj Hubli, Director, Coffee Day Global Limited, Mr. Venu Madhav, CEO of Coffee Day Global Limited, and Mr. Sadanand Pujari, Company Secretary, Coffee Day Enterprises Limited. I would now like to hand over to Mr. V.G. Siddhartha to take you through the key highlights of our results. Over to you, sir.
Thank you, Natasha. Good evening, everyone. Thank you for joining us today to discuss our Q3 earnings. I'm happy to share with you the key highlights of Coffee Day Enterprises results for the quarter ending December 17. The consolidated numbers of CDEL for Q3 are as follows. Gross revenue of 10,978 million, growth of 27% year-on-year. EBITDA of 1,951 million, growth of 11% year-on-year. PAT of 220 million, growth of 91% year-on-year. For the 9 months ended December 17, on a consolidated basis, CDEL posted a gross revenue of 30,336 million, a growth of 20%. EBITDA of 6,157 million, growth of 24% year-on-year. PAT of 849 million, growth of 169% year-on-year. The reported EBITDA and a PAT for 9 months period ended December 17 includes the exceptional gain of 532 million and 380 million, respectively, on account of sale of our equity stake in Global Edge Software during the quarter two. Improved profitability reflects our strong effort across the business in the group despite near-term challenges and macroeconomic conditions. Let me now share with you the key highlights of our flagship coffee business. CDGL has posted a healthy growth in Q3 with a gross revenue up by 22% at 4,962 million. EBITDA of 750 million, up by 12% year-on-year. Profit after tax is 101 million, up by 56% year-on-year. For Q3, our retail gross revenue are up 12% year-on-year to 4,090 million, and retail EBITDA is at 738 million, up by 11% year-on-year. Our steady financial performance is results of our continued efforts on product innovation, enhanced customer value proposition, and power of CCD brand. In December 17, our cafe network stands at 1,704 spread across 246 cities in India. We added a gross 30 cafes in Q3. We are happy to report that Q3, our ASPD grew to 15,572 rupees, 5.1% growth on Q3 of 17. And our SSG growth came in at 7.08. This quarter has been 24 consecutive quarters positive same-store growth for us. The percentage of cafe transaction through digital means stands at 44% during Q3 FY18. Some of the significant business highlights of the quarter as follows. Our domination in the beverage segment continues with our innovation offering with ensure healthy new customer acquisition and high loyalty among the existing ones. During the quarter gone by, we launched a new range of milkshake, Roche Rainbow Infusion, and refreshing range of winter beverages. Our strategic initiative on expanding our cafe revenue with a round-the-clock menu has been well received by our customer. Contribution from food and relevant cafe revenue has shown significant uptrend across the cafes we had launched it on a pilot basis. We intend to roll out it across India over the next 12 to 18 months. As per our Youth Digital Connect customer acquisition strategy, the downloads of our mobile app that was launched in July 16, we have reached 4.16 million at December 17. We continue to develop engaging digital strategy to build a deep connect, especially with the new age millennials. Our leadership in the vending machine segment continues. Total vending machine installed as of December 17 stood at over 45,900 machines, having added gross almost 1,900 machines during the quarter 3. Outside our coffee business, Sika Logistics continued to execute its order book with a sharp focus on resulting in strong revenue growth during the quarter. Quarter 3, Sika reported a revenue of 3,732 million, up by 40% year-on-year, with the EBITDA came at 441 million. At our IT park, driven by a new occupancy during the quarter, our let-out office portfolio has gone up to 3.46 million as of December 2017. Construction of a new building with additional space of 7.5 lakh square feet is also in progress. With this, I will now open the floor for questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. We take the first question from the line of Nilay Shah from Morgan Stanley. Please go ahead.
Thank you. My first question is on the difference between the average sales per day and the SSG that's opened up for the coffee retail business, again after a gap of many quarters. What's the reason for that?
Nilay, Jairaj here. See, triple SG is computed is a comparison between 2 periods. Okay, and for calculating of triple SG, we have taken it as net of sales, whereas ASPD is calculated including the taxes. So since there has been a drop in the tax rate from 18% to 5%, that has impacted a bit on the ASPD. So that's why there is a difference you see here.
Okay, got that. Very clear. So it's basically the taxation which is driving.
Yeah, it was 18%, now it is 5%. The impact is 45 days. November 16th onwards this impact.
Got it, sir.
And we didn't increase the price we passed on the benefit to the customer.
Correct. Has there been any appreciable demand uptick that you've seen after the price cut? After the end consumer price cut that you've seen?
We've seen a slight improvement, Nilay, compared to what it was earlier.
Okay. All right. Coming to the margin profile, there's obvious benefits that are sitting on account of GST. So the one issue is that you obviously have to cut prices, but the other issue is that also that you've got things like input tax benefits. And let's just talk about the lease rental line as one line item. But when I look at the numbers, I'm not seeing those benefits flowing through on account of the standard taxes which were there earlier, which were the service taxes.
See, we increased the price by 5%. And we took a small hit for ourselves.
Yeah. Nilay, to answer your question, you are comparing the overall gross margin, which is a combination of mixed impact of PP revenue versus retail revenue.
No,
you should consider
a margin.
Yeah, retail revenue. If you take retail revenue separately, there has been an improvement of almost 110 basis points compared to the same period last year. And this has come on the back.
Level, right?
Yeah, at the gross margin level, correct.
Okay.
This has come on the back of substantial reduction in the coffee prices and also overall improvement in the margins on the beverages front, both at the cafe as well as the vending machine level.
Okay. So when I take this underlying gross profit margin expansion and add to it certain benefits on account of GST, which have lowered the costs such as lease rentals, it's not adding up into what should have been the EBITDA margin expansion.
Yeah. Nilay, to answer your point, your assumption is that the GST on lease rentals has come down. In fact, it is the other way. The entire input benefit which we were getting earlier, including the tax on the lease rentals, has been denied now. In fact, there has been an increase in the cost of rentals because of the denial of input tax credit. So though we have taken a marginal hike in the price, The major chunk of the loss on account of denial of input tax credit has impacted the P&L. That's why you see a small dip in the EBITDA, retail EBITDA.
That's for half the quarter. But for the other half, you've taken the price increase. So what you're saying is
No, we've taken a price increase of only 5%.
Yeah. Nilay, we have not taken the price
offset.
Nilay, just to clarify, the price hike taken is very nominal, marginal, whereas the loss of input was much, much higher, and we have taken that and we have absorbed that cost into our P&L.
So should I assume that going forward, the trend for margins will keep dipping lower at the EBITDA margin level? Gross profit could keep going up because of various factors, including the cost of coffee. But at the EBITDA margin, your trend line will shift lower because you haven't taken sufficient price increases. Would that be a right?
No, we may take a price increase after 3 months, no, because government said you have to pass on. Okay, but in April, what call we can take is our discretion.
Okay, got that, sir. Thank you very
much. Because they said, please pass on to the consumer. Government clearly instructed. We obey the rule of the law.
Understood. Very clear. Thank you very much.
Thank you. Participants would like to ask questions, please press star, then 1. We take the next question from the line of Devang Doshi from Asian Tiger. Please go ahead.
Sir, good evening.
Good evening, sir.
Sir, I would like to know what are the new outlets added in Q3 and what we propose in Q4 and financial year 18-19 for the coffee day.
Yeah. See, we added 30 outlet Q3, and see, we in our business plan when we came public 2 years back, we said next 3 years we are going to add 130 to 135 outlet. So we are on track to that. But see, you should understand what we are doing is that what we have opened 12, 14 years back, some are 300, 400 square feet without washroom. Those are the things we are cleaning it up.
Right, sir.
Because we at 400, 500 square feet, it is killing the brand. So we are cleaning it up, but we think we can easily add 125 to 135 outlet easily for next 1 or 2 years. There should not be any problem.
Okay. So second question would be, sir, any plans of demerger, sir?
As I told you the other day, at least next 1 year, we are not planning anything.
Oh, okay, sir. Thank you so much.
Thank you.
Thank you. Participants would like to ask questions, please press star, then 1. We take the next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, just wanted to understand, so if you see the retail...
excuse me, this is the operator. Mr. Chheda, may we request you to use the handset, please? Your voice is not clear.
Is it clear now?
Yes, thank you.
So if you see the retail EBITDA and the retail EBITDA percentage, versus last year, there's about 300-400 basis point change. I'm guessing that this reported number just includes the retail operations. It doesn't include vending and exports. So if you could...
No, vending is part and parcel of retail. And I don't know which figures you're talking about. I have the retail EBITDA on a net sale basis I have with me. There's a marginal drop of about 70 basis points, not the 400 points.
If you're including with vending, then it is perfect.
Vending is very much part and parcel of retail operations.
Okay. On the second part, what kind of margin drivers do we have in this particular line of operations?
Which one you're talking about?
The retail, the overall retail operations.
See, we are planning how do you increase the sales per store. Okay, we got a fixed cost. How do you improve the sales per store? We have got different plans. Why don't you Gold Rush for your planning?
Sure. Basically, the strategy would be to have some premium products that are going to be launched, which will have higher margins. Now, this will clearly appeal to certain set of people who are looking for a better product with a better ingredient and a better mouthfeel. So what we have done is in 33 stores of ours in Bangalore, we created a new menu which has got all these things, and more importantly, the products are, a part of the products are made in the cafe itself, which gives it a great freshly assembled feeling. Now, this will have higher margins. So similarly in beverages, we will have some premium ranges that we will launch, which will have better margins. Also, by launching new cafes, if you had seen all the new cafes that we have launched, all of them are of minimum of about 1,000 square feet with better frontage and better interiors. Naturally, the sales in these cafes will be higher, and therefore so will be your absolute margin. So these are all the things that we are doing to see how we can value. The last thing that we will be doing is to launch value menu for value seekers.
That is around 30% of our menu will be value menu in next 6 to 9 months.
So we'll be having a lot of products which we are re-engineering to ensure that our margin percentages are sacrosanct, but at the same time are able to give value to customers, both at a la carte price and a combo prices.
So this increases the growth but not the margin. That's how we want to put it?
No, with premium products, there is a chance that the margin also can change.
Okay.
It's a mix of premium product and a value product, and it will drive the sales up.
Okay. And my second question is, with respect to the tech parks and the rental side. So if I'm looking at your presentation, it says that what you generate rent is about on 3.5 million square feet.
Yeah.
Right.
So that's, I think next 6 months it will go to 4 million square feet.
Okay.
Because we are already signed almost 70% of the building of that 750,000. So next 6 months, I think our rental will go to 185 crore rupees.
Okay. So your rental, which used to be 100 crores, if I'm not wrong.
No. Last quarter was 150. This year we are talking 150 crores.
This year we are talking 150 crores. And with
185 crore.
Sorry?
That will go to 185 crore next year.
Okay. So 150 goes to 185, and this is the total buildings on ground today for you, 4 million square feet, or there is?
No, 4 million is completely occupation certificate is also there, and another 750 or 800,000 square feet is almost 70% done.
And when will that go for rental?
Another 12 to 14 months.
Okay, so basically I'll just repeat here, 3.5 million square feet is equal to 150 crore of rental per annum. Another 7.5, so 4 million takes...
3.3 million is 150. Another 750, which is under occupation today, will add another 35 crore. Another new building will add another 35 crore.
Okay, that's another 7.5 lakh square feet.
Totally another 70 crore to 150.
Additional 70 to 150. Hello?
Yeah.
Okay. Thank you, sir.
Thank you.
Thank you. Participants would like to ask questions, please press star, then 1. We take the next question from the line of Aditya Joshi from Anand Rathi. Please go ahead.
Yeah, good afternoon, sir. Sir, I have a couple of questions relating to the cafe business. So first being, what would be our food and beverages mix currently in the stores that we have launched the full all-day menu?
Yeah. The current mix for Q3 has been...
No. Only all-day menu is, sir.
Yeah. The food and beverages mix.
You want for the new... what we launch, pilot projects or full? Which one you want?
Yeah, all stores, sir. All stores if possible.
All stores, yeah.
Okay. The overall food mix, the mix of food beverages has been, food is 33%, and beverage is 58%, and the merchandise is 9% for Q3.
Okay, sir. And for the pilot projects that we have launched?
Yeah. The food combination from 33% went up to 37%.
Okay.
But so did the beverage also, because people who order food will also have beverage.
Got it, sir.
So the merchandise percentage came down, but both the beverage and food percentages went up.
Okay. So, sir, beverages would be 60, again 73, or it would be again 60?
60%.
Okay, sir. And sir, what would be the gross margin profile in food business versus the beverages business?
We are combined.
No, we don't disclose individual division-wise gross margins. We disclose retail as a whole.
Okay, sir, no problem. Sir, next question is regarding the merchandise sales. Sir, what kind of growth have we seen in merchandise sales in last 12 months, and what has been the progress there?
Approximately 13% growth. Yeah, we're approximately seeing around 13% growth in merchandise.
Okay, sir. Sir, next question is regarding the cafe renovation plans that we have every year. Sir, how many cafes do we bring under renovation every year, and what is the capex per store?
120 stores.
Sorry, sir?
120 stores.
And what kind of capex do we incur for this renovation?
So anywhere between 12 to 20 lakhs rupees.
Yeah. Average around 15 to 18 lakhs.
Okay, 15 to 18.
See, what will happen, some cafes which will be around 10 years old, they renew the contract for next 12 years.
Mm-hmm.
That will spend around 17, 18 lakhs rupees and do it up well so that next 12 years it is all taken place.
Okay, sir. And sir, is there any loss of business due to this renovation? 1 to 2 months? Is there a loss of business?
We close it for 30 days. If it's a small renovation of around 10, 12 lakhs rupees, when the cafe is running only in the night, we work and do that. But sometimes, on 120 cafes, at least we'll do 30 cafes for 30 to 40 days.
30 to 40 days loss of business. Okay, sir. Sir, next question is regarding the expansion at the metro stations, these small outlets that we are opening. Sir, what kind of plans do we have there?
See, as I told, metros, highways, or this 250 towns and cities, we think easily we can put 120 to 140 stores in next 2 to 3 years. There should not be any problem because our pricing is affordable luxury product. So only thing we are very clear now, at least 30% of our money should be combo with the value add so that even we can attract common man also and more students. And we would like to concentrate on our superior premium product that remaining 50%.
No, sir, I'm asking because the price points that we offer at the metro station outlets is very low as compared to the cafe outlets. So our price point starts at...
It may be express.
Yes, the small stores, that the small outlets kind of a thing that we have.
So, Aditya, there are two formats. One is the cafe and one is the express. Express is a budget format where it's very automated and lower volume product.
Okay.
Therefore, the price points are lower. The cafe across, the prices are the same.
Okay.
In that category.
Okay. So in express, the price point starts at 20-25 rupees, correct?
That's right.
Okay.
See, typically, all these metro locations we evaluate in terms of opportunity versus the cost versus the space. And any of the amenities that we require to run a cafe, like a wet connection, which is required for the water flow.
Got it.
So based on that, we take the judicious choice of by what format we should go and what pricing we should have.
So tell you, our gut feel says that easily we can grow 200, other than the 135, we can easily add 200 express kiosks every year for next 2 to 3 years. Am I right, man?
Okay. Sir, the reason of asking this question is that we are seeing metros coming up across country. So that's
schools, hospitals, all these things, you'll find this kind of place.
Okay. Sir, next question is regarding the...
One more thing to tell you, Aditya. In some of the metros, a couple of people take the tender and also put our vending machine.
Okay.
Okay, you see the coffee machine and read it as coffee day, and you will think it is an express or a cafe.
Okay.
So there the prices could be, let's say, 15 rupees, 18 rupees, 20 rupees also.
Yes.
They are just a client of ours.
Got it, sir. And sir, next question is pertaining to the energy drink Storm that we launched. Sir, how is it doing and what kind of response do we have?
We are doing well. I think, because segment-wise we don't give revenue, but I think we are very happy with the launch in 4 months. We have done well. I think we'll do better in the summer months than now.
Okay, sir. And sir, final question going ahead, what would be our focus at the store level? Will it be to increase the food percentage of overall store level or the beverages percentage?
See, how do you increase the footfall? What we are doing, 15,700 rupees, how fast we can take it to 20,000 rupees? That is the internal target we are working.
Okay. Got it, sir. Thanks a lot, sir. All the best, sir. Thank you.
Thank you. We take the next question from the line of Rajesh Khan from Rajesh Securities. Please go ahead.
Thanks a lot. And to the management of Coffee Day, congratulations on the good results that you have announced. I have one question with regards to the monetization that you have done with regards to the investment that you have made in software company Global Edge, as well as the investment that you have made in Mindtree, which has given you handsome returns. So do you have any active plan going forward to make such kind of an investment so that apart from the normal coffee business that you have, these kind of investments will also give you returns which are much more than the traditional returns that you get in the coffee business?
No. We clearly told when we went public, next 5 years we are not going to put any big investments. Global Edge, we had invested 3.5 crore rupees, and we got one portion today. Whatever the money we got, we made a EBITDA of 53 crore, and net profit after tax is around 39 crore, and that too only some portion of the stock. Okay, on a performance, they have paid this money. I wish we think we will make another minimum 40 crore next year also in the Global Edge. So Global Edge after tax benefit to us will be 80 crore, and before tax maybe around 120 crore, something like that. That's our gut feel. Okay, and our portfolio today in Mindtree should be worth $350 million plus. See, other than coffee business, we are coming. Any value we get, any offer which is not we can't refuse. We will disinvest any investment. But we need a very good premium. See, Global Edge, we thought that the value of our portfolio in Global was 30 crore rupees. But in the end of the day, I can tell you, we are feeling we may get anywhere between 120 to 130 crore. So if somebody gives a valuation, right valuation, any business we sell and put the money back to coffee business. But next 2.5 years, we are not going to start any new business.
Okay, thank you.
Thank you. Participants would like to ask questions, please press star, then 1. We take the next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, sir. Just wanted to understand the capex in the coffee business. So you said we'll create 30 cafes per annum and there will be replacement cafes.
No, that's for the cafes per quarter. So when we went public, we clearly told we'll build 120 to 135 stores minimum per annum. So this year our internal target is 135 cafes. How many cafes we have built as of today? 92 cafes we have built. I think we'll cross 130.
What is the corresponding capex for 120 cafe?
So average
is 37 lakhs
to 40 lakhs.
Yeah.
40
we are taking a bigger cafe now, because before we used to take 500, 600. Now we have made it a rule, nothing less than 1,000. So capex are slightly going up.
So 48 crores here and 33 crores on replacement capex. So that's 80 crores, right?
Vending machines, we are going to put at least 70, 75 crore every year for the expansion, because that business is a huge business for us.
So vending will be 75 crores.
Okay. Annual plan for the capex, can we give? Just capex. Cumulative this year.
So far for 9 months we have spent 124 crores.
What full year?
Full year is about 155 to 160.
155 to 160 crore.
Okay. And second question is, whatever EBITDA we have reported in the cafe business on the 9 month, which is a number of 220. What is the corresponding cash flow number on 9-month basis?
Yeah, I can give you that. The cash profit for the 9 months has been 158 crores.
115?
158.
158. Okay, so that's about 160 crores. So your basically cash conversion is basically 160 divided by 220, which is about 70%. EBITDA to cash conversion is 70%?
Yeah.
Okay. So what part of, so is there any debt on the coffee business side? Or And what kind of taxations do we pay in coffee business?
Full tax we pay.
We pay full tax. And is there any debt on the balance sheet of the coffee business?
Yes, it is there.
How much is that now?
The net debt is 56 crores.
That's not a big number. Okay. Thank you.
Thank you. Next question is from the line of Rahul Jeevani from SKS Capital and Research. Please go ahead.
So did we take a price hike during the quarter? I think you said 5%, right?
5% probably.
Okay, so then shouldn't be the same store sales growth been higher? I mean, if
our revenue recognition was a gross revenue. We had a 18% tax on that. Okay, that tax has come to 5%, and we used to get an input credit for the rentals and all. We lost all these things. So to match that, actually we should have taken 7 or 8%, but government said you have to pass on this one. We didn't want anybody to come and inspect us, so we took a 5% rate hike and took some hit to the margin. But we'll take a right call next quarter regarding the pricing in next quarter, early next year.
So then what explains, the underperformance compared to the other players in the industry? I know it's not a direct comparison, but the other players have shown very healthy same-store sales growth during this quarter.
But you should understand, we don't want to talk about competition, but for 24 quarters we have got a positive sales store. If you can analyze some of the competition, what is the negative they have, we are a beverage player, and we have 24 quarters, we have seen a quarter-on-quarter growth.
Also, we have passed on the full benefit of tax reduction to the customers.
Okay. And so
we don't want to make a comment on that because some people will be called for inspection. We don't want to be involved in that. Yeah.
Okay. And on console basis, what's our debt right now and cash?
3,200 crore is the debt.
And cash?
1,200. 1,200 crore.
1,200.
Yeah.
Okay. Thanks.
Thank you. We take the next question from the line of Samir Dalal from Natwarlal and Sons. Please go ahead.
Yeah, hi. First of all, congratulations, good results. My question though was on the new 33 stores where you've done your, the food introduction of that. Wanted to know what kind of sales growth in those stores have you witnessed over the last quarter compared to what the historical sales were in those 33 stores?
Cold drink.
Overall, yes.
Yeah, we have seen high single-digit growth in these outlets compared to their historical sales.
So even though you had this new menu addition, it was only about 8 to 10, anywhere between 8 to 10% growth in the same-store sales with the increased product range as well, right?
Because it is 30 stores, it is anywhere between 7 to 15%, depends on the store and location.
Okay. Now, given that you got that 7 to 15% increase, how soon would you be able to roll this out to some of your bigger stores? And what is the target for FY?
We are very clear, no? In 12 to 18 months, we'll roll out everywhere in India.
All over all 1,700 stores?
Yeah.
Okay, so now do you think that we could expect similar 7 to 10% volume growth just from these products?
No, we don't give any forecast. No, we don't want to forecast anything. We think it will give us a more walk-in, but we don't want to commit anything on that. We don't know that.
Okay, now second question is again on those 33 stores. Given that you had a 7 to 15% increase in volumes, the sales there, how did the EBITDA margin look in those 33 stores compared to the average EBITDA margin? How much higher was it? So what I'm trying to ascertain is what kind of increase, if once you do the rollout to 180, all your stores, what kind of margin accretion can come through?
See, when we did this 33 stores, since it is a pilot that we have done, most of the product was made in Bangalore for these cafes. Now, when we roll out across India, there will be other costs associated with that which will come in. So it will be difficult to directly tell you what will be the overall benefit everywhere else. But in these cafes, we have seen an improvement in the EBITDA margin.
Okay. So, how many percentage points have come through those 33 stores? I agree you cannot extrapolate, but what kind of increase has come? If you can at least give some idea.
Small, we can't say because it is a fresh assembly. We display. There will be a lot of wastage. So it is a trial and error we are making. So it has maintained our margin. There is no big upswing, but it will attract more people to come to eat fresh food. I can assure you that.
Okay, great. And you said about 200 store addition for next year, including your vendors that you have met.
No, 135 stores.
135 is the store count, but you also said you're going to do those, express stores which could.
That way we think we can add. That is small. It will give 5,000 rupees revenue.
Yeah, there's a potential.
That is the potential. We will decide what to add. Minimum it may be 100, but we think small this one we can up to. But only we are giving a guidance on 135 stores. That's it.
Okay. Thank you very much, and good luck.
Thank you. A reminder to the participants, to ask a question, please press star, then 1. We take the next question from the line of Neha Dunn from Pragati Securities. Please go ahead.
Hello. Thank you, sir, for the opportunity, and many congratulations for a good and consistent SSG growth. Sir, I had a couple of questions. One with regard to the demand scenario and how is the expansion of these cafes and vending machines playing out for us? Where do you see this for the company?
See, we have given a target when we went public. We can easily add 6,500 vending machines for 3 to 4 years. We are on track on that. And we said 135 stores. See, 135 stores in India with our kind of operation should not be a problem. But see, are we really happy with walk-ins and the sales? Tell you honestly, no. See, but to tell you, even you give me capital, building more than 120 to 150 stores, getting a right location, getting all the permissions, opening is not such a easy task. So I think 135 should be a decent target, and it will yield results in a longer run. See, we are as a management committed to build a brand for next 10 to 15 years, and we are a large food and beverage brand, only Indian brand today of our size. We have to invest this 135. If not, when the market is, if you are right, and if the GDP goes to 8-9%, that time we go to the market to put on the store, rents will be double or triple. So we have seen this for last 15 years, 12 years. The rentals depends on the economy and how the other businesses work. See, suddenly retail jewelry picking up, bank picking up, or apparel picking up. These are the competition for right places for us. So it is not an easy task to put 135, but to put 135, we almost screen 1,500 stores in India.
Okay.
And we give a 300 or 400 store offer at our right rental, we give only 130 or 140. It is a process. See, if you ask me, you want to put store today? Yes. If you are looking at a 5 to 10 years for the company, we have to put store today.
Right. Okay. So, but you feel that the demand scenario is quite positive going ahead?
Yeah, see, one thing, we ask this question to ourselves always. With this kind of population, if the pricing is right and the product quality is good, you can sell food and beverage in volumes. Just
right.
Tell you, I don't know, you saw our presentation. We launched a small product called milkshakes, okay?
Right.
Yeah, you have seen a lot of milkshake brands which has come to the market. So, a good product. You should try that product. Whatever the milkshakes we have launched, you should try that bottle product. It's a fantastic product. But only thing, sometimes I also ask this question to myself, at 130 rupees, don't you think it is high? Yes, it is high. That's the reason we are offering in few stores, and we're launching buy one, get one free. Suddenly it becomes 65 rupees. It looks very, very attractive. So we'll write a right strategy to make sure that our sales goes up and people like our product.
Okay, sir. And second question was related with this new menu items, especially the chili shakes and the rainbow infusions that we have introduced. How do you see that panning out for the company? How well has that been accepted by the consumer?
Okay. My colleague Venu will answer you on the food, and Rainbow I'll answer it.
Okay, sir.
Yeah. See, the choice of introductions that we will do is one, to have freshness in the product that is given.
Okay.
2, to give variety. 3, to remove fatigue. 4, to have some image change. Some of them would be to see if any gaps in our menu. For example, the milkshakes, where there was a gap in our menu where there was a lighter product and at an affordable price. That's how we created this range. So these are all the characteristics that we see before we launch a product.
Okay.
So regarding the rainbow infusion, see, when it is a 7 color, this is a product developed by a European and one of the best European research firm, and we developed it jointly. And it is a health drink. You get a pomegranate, you get a oxflox. So it is only 1 or 2 is tea in that. Remaining is all herbal extractions. Okay, and no sugar in that. It's just stevia in that. Okay, so we feel this kind of product will really take off. For us, we should understand. This is one is cafe. It is a second is a great gifting product. If you want to give to your aunt or some cousin when you go home, we should take that and give. It is a good product. And for us, it will help to upgrade our vending sales to some of the corporates these products.
Okay.
Even we have put up the plant to manufacture this in our inside the company only. So we are very bullish on these products.
Okay. That is very helpful, sir. Thank you very much.
Thank you.
Thank you. We take the next question from the line of Aditya Joshi from Anand Rathi. Please go ahead.
So thanks a lot for taking again my question. So I just had a follow-up for the cafe business. So do we deliver it from our stores, and do we have any plans of delivery in all our stores?
Our colleague Venu will answer this.
We are delivering from stores. We are delivering across 8 cities in some of these cafes, in some of these cities. Currently, what we are seeing is the throughput in terms of packaging, product, and likability of the products and temperature. Mm-hmm. That is what we are concentrating on now. We've got encouraging response on that. And eventually, we will broad base these into more cities and more cafes.
Aditya, to answer it clearly, because we are introducing fresh assembly in all our stores in next 18 months. So we can give a lot of fresh food to anybody in India near their house. So we will be one of the beneficiary on that takeaway for this one.
Okay, so we'll be rolling out delivery in all our stores in next 18 to 24 months. Is that right?
You see, in delivery, it is not required to be done in all the stores because we have cluster of stores in each specific location.
Got it.
So we would wisely choose which location, which space, where the throughput is not high, we can use it for delivery.
Okay. And sir, will we be using our own infrastructure, setting up our own infrastructure, or a third-party infrastructure?
No, today it will be third-party. Swiggy's of the world is the best answer for us.
Okay. Thanks a lot, sir. Have a nice day. Thank you, sir.
Thank you.
Thank you. Next question is from the line of Rahul Jeevani from SKS Capital and Research. Please go ahead.
Yeah, so just to follow up the SSG number we report, is it net of tax or it includes tax?
Yeah, it's net of tax.
It's net of tax, but the ASPD was not net of tax, right?
Yeah, ASPD is an absolute number. We are taken based on the top line.
Okay, but SSG is net of tax.
Yeah.
Okay, thanks.
Thank you. Participants would like to ask questions, please press star, then 1. Participants would like to ask questions, please press star, then 1. As there are no further questions from the participants, I would now like to hand the conference over to Mr. V.G. Siddhartha for closing comments.
Thanks a lot for joining us. Thank you.
Thank you very much, sir. Ladies and gentlemen, on behalf of Coffee Day Enterprises, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.